Today's number is 2018 because there are similarities in the current market and that period of time that we need to talk about, and they have dramatic implications for all of us as traders and investors into Q4. Tariffs, tax cuts, and the possibility of oil starting to break out. What could this mean as Wall Street activates massive dark pools across the board? There are certain stocks that will show us if we're going higher, and there are certain markets that are starting to weaken now. And with the advanced decline line decreasing now over the last 3 sessions, we need to talk about the possibility of a bad October. Guys, join us as we go through stocks, commodities, and cryptos to break down everything that you need to know right now about these markets. And boy, oh boy, there are a lot of things that we need to discuss. Well, welcome back everybody to The Daily Show. My name's Thomas Atkinson, and in today's video, we'll be talking about those massive dark pools from Wall Street, what's going on with the data, and of course, have we seen similarities of previous cycles? Well, we'll kick things off here with, of course, the chart that's going around from the compound here, which is a 2018 versus 2025 year-to-date overlay. And you might notice some significant similarities with this chart. First, there were tariffs, then there was a rally, then there was a serious bit of selling. And in fact, it hit tech to the point where we were seeing markets absolutely dive into Christmas. This certainly was no Santa rally during that year. And I still remember trading around the points of Christmas and into the new year as we saw some significant dip buying opportunities. Now, the good reason was that we actually ended up going up. But are there enough similarities? Well, let's quickly read here 2018 versus right now. Did we have tariffs in both years? Yes. Did we have tax reforms in both years? Yes. Did we have rising or lowering rates? Well, in 2018, we actually had rates going back up. Of course, in 2025, we have rates going down. One of the interesting things here was actually a rising dollar with rates versus a falling dollar and falling crude, which is what's happening this year, versus, of course, crude going back up. So are these similar? Yes, but of course, the circumstances are a little bit different. But is it really that much different? Well, let's talk about what is going on when it comes to basically retail and the potential here of a little bit of euphoria leading into October. Now, you're going to see some stats thrown at you that are looking very, very good and very bad at the same time in today's video. And we'll try to discern what it means on the short term versus the medium to long term, as I think that is probably one of the most important reads in the markets. But are people getting euphoric? Well, the answer is quite simply yes. JP Morgan's high volatility stocks, basically a retail basket, is blowing up. And of course, we're seeing that in the big gains that we've had since April in things like RK and many other hypergrowth stocks, Hood, PLTR, so many others doing very, very nicely. And this has created what we call a retail imbalance. Now, we've talked about this for the last kind of couple of days because we're starting to see those signs of euphoria that we haven't really had since other rallies only about a year ago. And remember, that kind of crescendoed in August and sent markets going down, particularly semiconductors, which took almost a year to recover. But here's where things get even weirder, and it's got to do with the dark pools. And guys, we've been looking for this for a while. So many dark pools. I'm just going to read them all out right now. We have Russell 2000. Now, if you're new to the channel and you don't know what these are, basically these are transactions between two parties that are done off market. They're not done on the normal, and then they're reported at the end of the day. And generally speaking, of course, they're between two big entities. And you might straight away say, but Tom, someone's buying, someone's selling. That's how it works. Yes, but you always assume that you think that these people all know the same thing. Remember, people have different information, and somebody is often or always will be willing to take the other side at the right price. So in this case, you've just got to remember it could be a sign of someone knowing something. Now, this actually is the largest cluster since inception. It's the most amount of large trades ever to happen at one particular price. And you could say, well, this means that we're going up. It could also mean we're going down for a little bit here. That's a big cluster. Look at it. It looks like one of those wave activity kind of things you see after a volcano eruption or something into the ocean. But either way here, guys, we've got some big ones. VOO printing some more large trades over the last couple of days as well. We've got big moves here, 11 trades, $8.9 billion in size, all clustered together. And you might say, well, Tom, is that a buy the dip? It certainly could be. But at the same time, this now marks 4 large trades within a very tight price range. And remember, in previous periods, this has often marked a tipping point for markets. Sometimes it's been like a little bit of a pullback. Sometimes it's been just an accumulation into a breakout, but it does often keep the market at bay for a period. Now, if we saw Nvidia, which we'll look at later on today's video, break to the upside, I think we've got to say it's on and markets are going to continue to rally for a bit. But it certainly makes you have a little bit of a pause in what has been an exceptionally good bull run with no weekly mean reversion. And what that means is we haven't gone back to that weekly 20. Here's the Qs, the second largest transaction ever recorded. Biggest dark pool ever recorded came through less than 48 hours ago. And then, of course, another ETF with a sweep right up here at the highs. And I think maybe what's more worrying is actually one of the best stocks of the year, which is, of course, Broadcom. And the fact that this has reacted very interestingly to the previous large dark pools. Here we had a large dark pool. We got some volatility, actually went down a bit. Here we had a cluster of large dark pools. We got the decline coming into, of course, Liberation Day. And here we have one that looks like, so big, it's massive. And that just came through. And of course, could it be a temporary top? The answer is it certainly could. But we haven't actually had this now for months. We've been looking for it. You guys know that I track this all the time. I look for these transactions and I look for clusters. And one of the things is we just haven't had it in a while. So it's starting to mark in with this idea of euphoria. Could we push a little bit higher first? Yes. Do I think this is going to be the end of the market, the top, the end of it all? Well, with the current evidence that we have, probably not. But there will be some interesting things happening over the next couple of months. And in particular, remember, we're looking very closely post a Fed cut, because remember, it's over 6 months since the last Fed cut, so we start a new policy cycle. Are we going to get just 2 rate cuts, or are we going to get 4? Because if we get heaps, like 6, like the market's trying to think about right now, that could actually mark a late cycle move as well, which could be in defensive. So things like potentially healthcare, something that's been horrific and really bad investing, may actually start to do better. There are other sectors as well that could come through. So what else are we starting to see? Well, there are some good signs from the structure side. You might be thinking, well, what if we do have a volatile October? Is it going to be the end of the market? Well, generally speaking, when September does as well as it's done this year, remember 8 new all-time highs, quite rare for September. September is one of the worst months of the year historically. Remember, August, September, October, one of those months generally has a pullback between 5 and 8% in it. That's pretty classic. It doesn't have to happen, but it's pretty statistically likely if you go back through the years. If that does happen and we end up having a bad October, remember, currently with similar reads, 64% of the time the markets will be up, then Q4 return has usually been very good. So, of course, that bucks the trend of 2018. We do know, though, that we've had a lot of calls in the market thanks to the individual PCC. So this is, of course, for individual equities. That's hit a 0.45, indicating that a lot of people were buying calls. And this could be the perfect time for Wall Street to potentially drop the markets even a little bit. Because we know retail traders, a lot of us are in massive leverage right now, it could actually hurt a lot. You pull back the market 5, that could look like 10 on a semiconductor. All of a sudden, someone that's levered is down 30%. So, the thing about this is it's all about who's in it, where is the risk, and what are we looking at. Now, when we had similar reads such as the VIX going up and the markets going up to all-time highs, you can see here the next 3 weeks were pretty bad. Now, this is Subu Trades data, and you can see here similar RSI reads show the next 2 weeks. Now, I wouldn't go and trade off these themselves. I've often said here the market is still up. If I'm a longer-term investor, if I'm a position-based trader, if I'm someone that bought a little while ago, would I be scared of this? Probably not. But is there a chance of a decent opportunity? Yeah, there probably is. And what we're actually seeing is we're seeing more rotation underneath the hood. So I'm bringing those stats because I think they're important. We also note that in a bad time, actually, average if recession, we actually go up after the rate cut, then we go down, then we don't recover to a new high. Now, that would be bad. I'm not saying that's going to happen. I don't think it is. I think small caps and mid caps may perform better, and that could be where we're at in this market if I had to guess which one. But of course, we let the market do the talking, guys. We just bring the data. We understand the confidence that we need to have behind current kind of picks, whether that be a buy the dip, whether that be a rally thing. Remember, we're talking a lot about gold. I'm incredibly confident, have been very confident for years on that. But that is because it is built on an evidence-based approach. And that's what I'm all about here on the channel. And we are all about, you guys are all about this as well. why you like this stuff, and I appreciate your viewership very much. I've got to say, I've been reading a lot of your comments recently in the comments down below. Thank you so much, guys. It's been amazing to see how many of you are doing better. Some of you have done surprisingly well, I've got to say. Some stories came in. I was like, who is watching this channel? What are you guys doing? Anyway, October here, we can see that Wayne Whaley's data kind of suggests that there could be some volatility in October. And this is, of course, using up-to-date data. The good thing is it's actually based on the structure coming into September, which told us that maybe September wasn't going to be as bad as people expected, and it would probably be October if it's going to be. So at this point, October seems to be the question mark. Let's now look at the charts and the options to see whether that's true. Then we'll go through the lead indicators and some other stuff where the opportunities seem to lie. So first up, advanced decline line is kind of the weakest it's been for a while. Now, the last time we saw kind of these points, we were actually at extreme overboughts. And remember, we hit an extreme overbought last week. We then rallied up, suggesting that we'd have 2 to 3 days of very good trading. We then put in an extreme overbought, and since then we've pulled back. So I think the thing is we have to be open here to the possibility that the market at least might want to do a little bit of basic pullbacks. Now, if a basic pullback happens, what are we looking at? You're looking at around that 65.70. And I will say, when I've been online, the thing about this is that bears are salivating for a 20% drop. I understand why, but it is very clear to me that everybody is just jumping on the put straight away. And that's why we've suggested that the market is continuing to push up the wall of worry. And I still think that's kind of the way it's playing. But this is certainly a very normal possibility in a wall of worry style push. You know, it's a couple of steps up, 1 step back, that kind of thing. And the real question mark will be, can we get the deeper one, which would push to a 20 weekly. Now, if we took from the high to the low, this would actually mark a normal garden variety pullback of around 6%. And that's within that 5 to 8 that tends to happen. So remember, about 6,200 to 6,300, that level there is going to be very interesting. We weren't there that long ago, as you can see, but this is the type of level that Wall Street will be smelling out if it does come down. So you could see a lot of people trying to buy in here. I think you've got to keep that in mind if we do start to sell. Now, probably the Russell shows us the weirdest price action. This one here just looks like an extreme overbought. But the trend is still up. Even if I went down to smaller time frames, you know, you could argue certainly that this low break here has triggered some short-term sellers. And then, of course, there's now going to be a bit of selling around the 66.70, 66.60 zone on the S&P. But I always say, let's go and have a look at the options. So first up here, let's take a look at these options. And as you guys can see, it is a sea of puts. So every time the market goes down, what does everyone seem to do? They buy puts. Now, clearly, some people are getting ultra bullish on the markets because you can see into the end of the year, there's a lot of people betting on 7,000 now as a call wall and 6,800. They are the logical step, 6,700 plus, which we warned is probably a very key resistance, and we thought we'd see some selling off it. That level there, broken, 68. I think from 68, the market's going to try for 7K. Certainly very possible. But the key here is going to be the 6,600 zone. And you can see why when you look out actually to the next day, the 26th, because that's where the puts are starting to come through. So could we actually enter into negative gamma? Well, yes, we're actually starting to see negative gamma. Notice 66.35 closed at 66.37 is the current big put wall of the next 24 hours. And this suggests that the markets may want to push down to 66. If they get below 66, then it can really start to cascade. And that's what we call a waterfall effect in markets when it comes to options. So something interesting, certainly to watch. Trend, though, I will remind, weekly, monthly, daily is still up. So betting against the market is incredibly difficult. You've got to be very damn sure if you're going to do something like that. Currently, I think it's still, yes, there's a little bit of evidence, but it is pretty much more 50-50. Remember, most of the time you're going to be about 65 to 80% bullish because that's how you have to be in these markets, especially when the government and the Fed are working towards a single plan now, which is don't worry about inflation, guys, even though that might be coming back. We've got just one problem, the jobs numbers, and we'll support the economy and sugar rush it as long as they can. Let's now take a look at Tesla. 450 is, of course, the call wall, and it's pushing towards it. So that's bucking the trend of the rest of the market. But no surprises, Tesla does whatever it feels like. It is an options-driven market and sentiment-driven market. And then, of course, we've got NVIDIA No 185 break, no breakout, in my opinion, on that one. Now let's have a look at the old Bitcoin, because Bitcoin is holding the zone. The 63 IBIT level is holding. We do know that 70 is, of course, a big target that a lot of people have got, which is that kind of all-time level on Bitcoin. Remember, we're tracking this because Wall Street are all over the options now, and that's pretty much how Bitcoin is trading nowadays. Options markets make a big difference for it. What about gold? Gold is currently still bullish, and you can see here a bunch of people have started to stack puts for some unknown reason around 340. So yeah, something to watch as dollar breaks up, but still gold looks fine to me on the charts. Now let's jump on into the leads. So first up, since we had the cuts on the Fed, so the Fed basically said, yes, we're doing interest rate cuts. You'll see here that we've had kind of a resurgence in the 2-year yield, and that has actually corresponded with some movements in energy. You can see here energy stocks, which we first alerted to, I think, about 3 weeks ago. And frankly, they've been a little bit disappointing. You know, they haven't done that well. The ones that we've been talking about in our private community, links in the description down below, some of those have actually done very well because they're the leads in these sectors. But particularly oil services, I think, have been a very interesting sector. And you can see here that if this weekly closes above, it does start to make you think, maybe there's a bit of rotation from the street into oil as we may be going back into kind of like a stagflation environment. Remember, stagflation helps gold. The reason we like it, guys. Gold, silver tends to do all right. Who knows, Bitcoin, maybe that's okay as well. And then, of course, commodities, which we've been very bullish on this year. Rare earth mineral metals going ballistic and still going ballistic. Lithium as well, not even rare, but that thing's going up. So there are quite a few moves that have happened, and some of these have just been, different opportunities, not just tech. There are other things. RK has given us, of course, an overbought signal. Dollar index has broken above, which makes you think, is this an inverse head and shoulders to break up? Kind of at the moment, I'd say smaller time frame wise, dollar is bullish against, of course, the press, and most people's opinions. But of course, the higher time frame, I still remain bearish on it if you're going out for a year or something like this. Now, let's have a look here at the gold trade. Gold got close to 3,800, stopped. It's still in an upward trend, so nothing really going on there. And silver's taking a breather after a massive move. 2 doji equals basically a fair price for the market at this stage. US oil. Now, this was the big one. It broke up. I had a suspicion it may do so when it goes through here, and it's gotten back to this level. And you can see here that people are now going to be saying, well, wait a second, is this a double bottom? If it is, then could we be going back to $70 a barrel? It certainly is starting to increase. Now, this is a very geopolitical trade. It's probably one of the hardest trades of the year. And I've said that all year because it's a bit nasty. But some signs of life, I think the weekly close may tell us a lot more about real flows in oil. So we'll be watching. But it has started to increase. At the same time, if that happens, it looks like semiconductors have hit their first target. And of course, NVIDIA also hit that resistance, which makes us think, well, we have to wait to see further bull action because I think NVIDIA is the lead. You let me know, though, in the comments down below. Do you believe NVIDIA is the lead for the next kick up if we are going to kick up? Because this chart is going to be, I think, a big stellar breakout if it does happen. 200 plus could really happen on that stock should it break through. It could create one of those gamma frenzies. It's been sitting there for a bit. So, of course, at the moment, chilling in the zone. I'm not bearish on it. I just think it could pull back and stay in the range for a little bit here. Now, what about Tesla? You can see very dull. Do not short dull markets, guys. It can sometimes work out, but I wouldn't do it. That thing is dangerous. It's very dangerous. It can do some weird stuff, believe the ways that dull markets trade. And then, of course, we've had the Russell 2K, which is, of course, still bullish trend. No doubt, daily, weekly, monthly, it's still bullish. Investors and traders and people that are holding longer, what's the reason to be scared just yet? But what we did see was a cluster. And that suggests that there's a possibility of a temporary pullback or something like this. And of course, the key here is this shooting star candle or pin bar, which does look a little bit negative, coming off a higher high. On the smaller time frames, of course, you're going to be looking for lower lows. So currently it's on support here at the time. For some day traders, they're going to be watching around 24.30 for closures below, as that may trigger some extra selling. Nasdaq's kind of similar, just an extreme overbought market. And then you go over to Bitcoin, which didn't manage to get a daily close above our level or even a 4-hour close. I didn't actually look at the 2-hour. The 2-hour did close above, but this was an important zone. So Right now, if you're a bull in Bitcoin, it kind of needs to hold here and find buyers. If you're in kind of like tight, I guess you would say down in the trenches here in the smaller under daily timeframes. Daily, of course, has not changed up, but this is an important level. And I think with TA, the great thing about looking at charts, guys, is that if you see a response, remember we said this level here to this level here, we'd probably find some form of dip buyer. We did. Now, it may keep going up, and that's fantastic. But just remember, if you get a reaction off a zone that you've done in like kind of as almost a prediction, but you've done it with, of course, evidence-based approach, you should give yourself a good pat on the back because that means you've actually found a key level. Now, the way that it activates, that's the key. You need, of course, replication activation. But I would say that there are going to be some buyers around here, and stop losses could be under here, and it's possible that this may rally from this point. But like anything, it's an evidence-based approach. Proceed at your own risk. It's not a solicitation to buy, guys. You just got to be careful about what you're doing. Now, if the market keeps going down, which is definitely still possible, I think that we might make a newer low. And if we do a new low, I'm still bullish on Bitcoin, by the way, into the cycle stuff that I'm looking at and tokenization and some other stuff. But 98 is open and, of course, 104. So they're the two levels we're watching. The rest of the week, there's not much to talk about. GDP numbers coming out on Thursday. Yeah, it might be shocking. It might be good. Who really cares? They already know this. The bots know, so it's just an excuse if it comes into the news. And then core PCE, which is, of course, what the Fed often uses as their forward indicator. Guys, if you enjoyed today's video, please remember to subscribe. Thank you so much for being here. And to summarize, I guess, there is a real chance here that October might be a bit volatile. There's also a significant chance that the Fed and everything else like that will buck the trend here of what happened in 2018 and will actually end up bullish into the end of the year. That's at least the evidence base that we've got right now, but it is normal to have two pullbacks. We got the first one. We thought that would happen. Of course, I thought it would be like 10, maybe 15%, ended up being 20. And the second one is usually garden variety 5 to 8. So let's find out what we end up getting. Of course, we'll see price action show us the way. And as always, be patient and build an evidence approach. Bye for now.